Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, March the 8th. The year's 2021. Let's talk trading. Walmal method revisited with Walmal. Before we get started, always remember and never forget these videos are for educational purposes only. Your results may differ from mine and from Walmal. Walmal, how you doing today?
I'm doing pretty good. It's been a good day trading, so can't complain.
Yeah, it's funny, fellow traders. This is take two. We already made the video, and when I went to save it, the software said problem. We didn't record anything, so I don't know what happened. So we're going to do it all over again. So if I remember correctly, Walmall, I asked you to tell the traders what the Walmall method is in 25 words or less, but I think you took 125. So cut it down this time.
Maybe it was 500 words. I don't know. I've never been accused of having a loss of words, but in any case, basically what we know is that, especially with the pound dollar, we know that every hour in the London session and the first half of the New York session, that the pound dollar always moves a minimum of 20 pips. And usually it moves closer to 30 pips. I mean, even if you look at today, the current hour, we're only halfway through it, and we've already moved 18 pips. But all the hours prior to that moved 35 pips, 33 pips, 34 pips. And yet, the day's range is only 65 pips. So we're actually in 1 hour moving half of the entire daily range. And so that tells me, hey, you know what? There's money to be made here. Now, the only bad thing about when you're trading in a day like today where you only have a 65 pip range for the day is that means that there's going to be lots of green candles and lots of red candles on this hour. So your bias is going to go and change. But that's okay because of the way that the Walmal method works. And the way it works is that what we do is we draw a line every 10 pips. So we draw a line at the 0 line, and then 10, 20, 30, 40, all the way up to the 90 line. And then we repeat it, and just go in both directions repeating that. And then what we do is we just wait for a break of that line. And if we get a break of that line, then we go in and we just take the trade. And we set a stop loss on it. Your obvious places, if a place or a trade is supposed to be taken, let's say, at the 20 line, well, that kind of means that where should your stop loss be? Well, at the 10 line. That's obvious because that's where you would enter going in the other direction. And so it's just a very, very simple trade. And I'm the type of person where I like to take complicated things and try to go and simplify them as much as possible. Because when you're trading or doing anything in life, when you're trying to do things, if you have a system in place that becomes very, very easy to implement, you're more likely to go and actually implement it. Now, obviously, you got to go and make sure that the system is still going to work, but that's what I like to go and do.
So one of the things is that the traders are having a little difficulty understanding is with the stop loss, because in the rules that you set out, it's a 10 pip stop loss. Yet sometimes when you talk about, stopping out at 7 or stopping out at 3. So there's some of them are a little confused. Some of them understand. Maybe you could highlight that a bit for them.
Sure, no problem. The idea that 10 pip stop loss, I'm willing to go and lose 10 pips on any particular trade. So let's say I was trading one lot. That would mean that I'm willing to go and lose $100. And that's what I'm willing to lose. So that would be 10 pips. But the thing is, a lot of times you see the pound move, and when you see the pound move, it just, for whatever reason, it goes and cracks and breaks the line that you entered on. And when it broke that line, it did an about face, and it just went the other direction. And generally speaking, once it starts moving in one particular direction, there's a good chance that it's going to go all the way back down and hit your stop loss on the other side. So what I've done is I said, you know what? It's not just moving down 3 or 4 pips, but it's now moved down 5 pips, 6 pips, 7 pips. This doesn't look good. It's going to hit my stop loss. you know what, I'd rather lose 7 pips than lose 10 pips. I'm just going to go and just jump out of the trade and, and look for another entry. And that's just what I do, just because I'd rather go and lose, it's type of thing, using that example of one lot on the trade. I'd rather lose $70 than $100. It's much easier to make $70 up than it is to make $100 up. Then on the 3 pip loss, well, what I do there is that if I go into profit and I'm actually up 3 pips, I move my stop loss to -3. And the idea behind there is I want to give it room to go and continue, but at the same time, I don't want to go all the way down to my 10 pip loss, obviously, and nor do I want to go down even to my 7 pip loss. So I'm willing to go and say, give it room, give it like 6 pips or so to go and breathe, and at the same time, be willing to go and take a 3 pip loss. Again, the whole idea, it's much easier to make up 3 pips than it is to make up 7 or 10 pips. Continuing on to that, once I get to 5 pips, I then at that point move then that's a winning trade. And what I'll do is I'll move my stop loss at that point in time up to break even +1, so that I know in the example of one lot trade, I'm going to be guaranteed of making $10. And that's just a nice feeling, because that makes it actually easier to stay in the trade, because, you're not going to take a loss. When you're not going to take a loss, there's a breath of relief that at least comes across me anyway, where it's like, okay, no matter what happens here, I'm not going to take a loss. In fact, I'm going to put a tiny bit of money in the bank, and that'll be a wonderful thing. And then what I do is once I get up to the 10 pip line, I then move my stop loss up to +5. And that's where I get the idea of my 10-5-1. Once I get to 10, I make a decision. Did it stop at 10? Or is it continuing to move? If it's continuing to move, I stay in the trade, move my stop loss to +5, and I stay in the trade and see what happens. If it stops there and it just comes to a complete halt, it's not moving, or it's moving back and forth a little bit, it's time to go and exit the trade, because it may not move any further, and I'll just go and take the profits. And it's not, that's what I was looking for in the first place, and so that's a good thing. That's a win.
Yeah. So I've got the 1 hour chart displayed, and I know some traders are curious about this. Do you look at the 1 hour chart, or are you looking at a different chart when you're actually doing the trade?
Well, on my screen, I have the 1 hour chart up, and I've got the 5 minute and the 1 minute chart up. I also have the daily chart up, but I really don't look at the daily chart all that much. But I've got those 3 other charts up. Now, entering the Walmal trade, you can enter on the 1 minute, the 5 minute, or the 1 hour. It really doesn't matter, because this system is just based on price and price alone. I like having the 1 hour chart up because it makes it very easy to know, okay, for instance, at the beginning of this hour, we opened up right below the 20, okay, and it makes it very, very clear what that hourly candle is and how strong that hourly candle is. It just makes it easy to go and see it. I like to go and enter, though, on the 5 minute candle. And the way I do that is that I wait for the 5 minute candle to go and break the level. And then once it breaks the level, I then go and wait for it to retrace and then break it a second time. And then at that point, go in. Now, in this particular hour, what you'll see is that the very first candle on the 5 minute chart, it broke it. Okay? But then it fell back. The second candle went and broke it a second time. That would have been my entry at that point in time.
You would have entered on a let's see, we're looking at this hour.
Yeah, actually, I'm sorry. I was looking at the wrong pair at that time. Oh. Sorry about that. But on this particular hour, I probably wouldn't have entered the trade. It would have been a good trade, but on a 5 minute chart, it just broke it and then it just ran away. And that's going to happen, and you'll miss the trade. Now, that's what I did in the very beginning, because I was taking more losses than I wanted to. And as I got better, now I just go and take the trade more times than not by looking to the left. Now, the reason why I would have taken this trade is because if you look to the left, the 5 minute candle prior to the opening of the hour got all the way up to the line, up to the 10 line, okay, and it didn't break it. And the candle before that went all the way up to the 10 line, and it didn't break it. It just touched it on both those 2 candles. This candle, though, it broke it. So on this one, though, I said I would have jumped in, and I probably would have gotten in not at 10, I would have gotten in at 11, and I would have run that up. And then it got up to about 19 or so, and I probably would have jumped out, and so I would have only gotten 8 pips on this particular trade. And the reason why is because it got up there, it touched at 19, came back down, went up, touched the 19, came back down, went up, touched the 19, came back down. It's the type of thing where it's like, okay, enough is enough. Take my profits and just be happy with the 9 pips. Even though this is probably going to go up to the 30 line, all I need to do is make 10 pips. If I make 9 pips, I consider this sort of like, the old expression, it's close enough for hand grenades and horseshoes.
Yeah, that's for sure. Now the other question is about the re-entry. Going to the well more than once.
Yeah. Generally speaking, I don't do it. I mean, there are situations where you can do it, and I have done it. But generally speaking, I just don't do it because, like for instance, you look at the current hour on a 5-minute chart and look what it did. It ran all the way up to that 20 line. Now, for a re-entry here, we got to go and run all the way back down to the 10 line. And we're going to go and turn that hourly candle red, obviously. And then you start to say, you know what? It ran all the way back down. Momentum is now not in the upward direction. Momentum is now in the downward direction. I'd be looking for more of an entry to the south side as opposed to the north side. Now, the good thing about this is that one of the new pieces, which I haven't updated my trading plan that's out there, and maybe I need to go and do that, is that what I'll do is my other way of entering is not just at the 10 lines, but it would have been at the lows of the previous hour and the high of the previous hour. So on the low side, let's say this candle went and turned around, went all the way back down. My second entry would actually be down at like 3.5. And I would have entered right there and gotten in. I would get in right there at that point in time. And it's just and that would be, I wouldn't have to go and wait for it to get all the way back down to the double O. So that it's just it's just another way of going and doing it. And I would have the momentum behind me to go and do that as well.
So, do you suggest that traders use the 5-minute, or should they stick with the hour?
I would suggest, I think it's always better to go and look at the highest time frame because it takes a lot of the wishy-washiness out of it. I like using the 5-minute because I can go and see what's actually happening. Like right now, if let's say the hour ended right now, we're starting a new hour, and I'm looking at this thing, I see that the candles ran up, it came back down, retraced a little bit, now it's coming back up again. I get that information, I can see that. Even though it's still consolidated data, I can actually see how price has been moving. So it gives me a better clue as to what's going on. If I was to look at this on a 1-hour chart, right now, currently, all I would see is basically a flat top. And I wouldn't know about this moving up and down. And then I'd be a little bit less, this type of thing where I'd be jumping into a trade with maybe a little bit less information behind me.
So we've got about 2 minutes left. Is there anything else you want to tell the traders that might help them be profitable using the Walmal method?
Yeah, and the thing is, the biggest thing about this is that, I win somewhere between 70 and 80% of the trades. Some of the trades are, sometimes you only make 2-3 pips. Some trades you make 5, sometimes you make 10. I've had one or two trades that have made 20 or 30 pips. I haven't had a single one of them this year. They don't happen very often, but they do happen. They happened 3-4 times last year, so you can do that. But the biggest thing about this is you need to minimize your risk. You've got to go and, the one thing and the only thing that I can control in terms of my trading is how much money I'm willing to go and risk on a trade and how much I'm willing to let it run against me. Control that. That's the most important thing. So control that. So keep on top of your stops. Keep on top with what the market's doing. If I'm up like right now, if I would have gotten in on this trade, potentially could have made 20 pips on this trade. But at the same time, it could have very easily at that 20 line turned around and ran all the way back down and taken every little bit of that profit away. So just stay on top of it and watch it. In fact, in the trading plan, I think I actually say watch price like a hawk. That's exactly right. You got to watch the price and pay attention to what it's doing, and you got to practice. There's no if, ands, and buts about it. You got to practice. So once you make your picks for the day, maybe the next thing you do is reduce your lot size. If you were trading one lot, maybe knock it down to a penny, a penny a pip or something like that. So
Okay.
you're not
Fellow traders, just remember, it's not what you trade, it's how you trade it.